Good morning. You've tuned into ET Now. This is Buy Now, Sell Now with me, Karunya Rao and Varun Hiramat. Let's start off the show by taking a look quickly at the markets. The benchmarks are a smidge bit off from the day's highest point, but nothing really alarming at this point in time. Firmly in the green. Nifty is above 11,300 with a gain of about 80 odd points, and you have the Sensex looking firm with a gain of 260 points. Broader markets looking equally resilient, especially the small cap index, which is the big outperformer, up 1.5%. You have the mid cap index gaining close to 0.9%. If you look at sectoral indices, barring media and pharma, all the other sectors are in the green. What's aiding the markets and the up move today is a Nifty Realty up 3.7%. You have Nifty Auto up more than 1%. Some metal stocks are standing out quite smartly as well. You have Nifty Bank gaining more than 100 points as we speak, trading at 21,833 levels. From the benchmark indices, the top performer would be Grasim, which is up a solid 6%. You have ONGC, UPL gaining 2.5% each. Ultratech Cement is looking very firm, up 2.2%. And Eicher Motors continues to be strong, up 2% as well. You have Reliance, Titan, Maruti, HDFC Life, ICICI Bank. So many heavyweights, especially from banks, from autos, and some names from the energy pack as well, oil and gas pack rather, which are looking firmly well. On the flip side, what's capping the upside today? Z Entertainment ahead of its numbers, down 2%, Power Grid down 1%, IndusInd Bank is also looking a tad bit weak, down close to 1% in trade. Varun, why don't we take it across to our guests?
Okay, sure, Karunya. I think we're also supposed to bring up the NSN stock cloud for this morning. So while you are the person who's made the cloud, let me just read out the stocks that are in there today. Z Entertainment ahead of its results, showing quite a positive uptick given that results are expected to be not so good. You have DLF, who was on the channel this morning talking about the uptick in real estate and particularly with retail sales. Then you have an India Bulls real estate on the back of some M&A activity looming. You have an ADF Foods, a Mahindra Logistics, a Time Technoplast, a Sandhar Tech, a Voltas, which has seen some upgrades post a con call yesterday. We have a Chola Investment and Financial, and then an HFCL. These are all key components of the cloud this morning and stocks that are pegged to do pretty well. So take a look. With that being said, let's now move over to our guests. Kunal and Ashish are both with us. Good morning and welcome to the show. Thank you for joining us as always. Kunal, what's catching your eye today?
So, good morning. First of all, I believe it's an interesting day today because after a few days of sideways range consolidation, which is the first time that the indices are showing some signs of strong up move. Nifty is back about that 11,300 mark, and Bank Nifty is just about nudging towards a breakout of this 22,000 mark. So, and I think the good part is that the mix of stocks today are pretty well, and I think that's the standout feature. Now, in that regards, I would believe that I would probably focus more on the buy calls and have two of the stock names which are just about on the verge of a breakout. So HDFC Life is the stock which corrected from its recent swing highs by more than 10% odd, is now making a very good comeback, trading at just around the 600 mark. So I believe that the stock could be poised for a good upside till 640, 650 levels. Stop loss could be kept at 575. Would recommend that as a buy. And DLF, I think the stock which you just about discussed, this is the first time when I'm seeing that DLF is participating on the upside with respect to the Nifty as well. And there seems to be a good amount of interest into the stocks. So the volumes, the open interest built up as well, seems to be pretty attractive for DLF right from the word go today. So I believe that this stock can see a further rise in momentum. So a short-term oriented buy on DLF, targets at 168 and stop loss at 150.
Okay, thanks for that. So I hope our viewers heard that. DLF looks like it might be ready for a good trade today. So Kunal's flagging it off. If you guys are in the mood for a daily kind of purchase or a near-term buy, this one looks particularly exciting. Ashish, let's bring you on board as well. Do you have some stocks that are looking good in the near term for our viewers?
Yeah, certainly. I think the markets are consolidating very well, and The good thing is that the market breadth is now increasingly getting positive, so we are getting more confidence in the market. So individual stock specific outperformance is what is very encouraging. And with that, I think it's also, I would like to suggest is that it's a great time now to look at the mid and small cap space. Of course, you have to do your research well. And I have two stock ideas, both in the mid, one in the mid and one in the small cap space. The first to begin with is Federal Bank. I think Federal Bank looks very attractive at this rate. It is trading at a 30% discount to its average trading over the last several years, both on the price to book as well as price to earning. It has a significant discount to its average. And this is really something where the valuation has to catch up, because the bank has actually been doing quite well. It has been improving its ratios. Even the last quarter results were surprisingly quite good, both on performance as well as asset quality. The bank has very smartly increased its CASA over the years, and it continues to do that even in COVID times. So I think here the target, a very conservative target, is 75, which is quite a significant upside from the current market level. And I think this can really be bought by all investors. The target could be much higher if you can hold on for a couple of years, but it's presenting a very good entry point at the current market price. The other stock is Minda Corporation. Now, Minda Corp, again, the stock looks very attractive. The price damage has been immense here. Also, because their plastic component subsidiary KTSN was loss-making. But recently, the management has decided to sell this subsidiary, so that's a big positive. What is good about Minda Corp is that they are in three segments, mainly electronic sensors, security systems, telematics, and wire harnesses. Now, these segments do not have very stiff competition because there are not too many auto players in these segments. So to that extent, they are in a sweet spot, especially after getting rid of the plastic components division. The second is that they have a very widespread client base across India as well as in global markets. Volkswagen, Maruti, Bajaj Auto, M&M, and some of their clients. But the good thing is that no customer is more than 12% of the total sales. So there's a very widespread and diversified customer base. So that is what gives us confidence. Also, the company has managed to reduce its debt and is looking very well poised to do well over the next few years. Here our immediate target is 105, which is a significant upside from the current level of around 73. But again, if you can hold on for a few years, this again can have much more upside than even 105. So both these are stock ideas which investors, if they have 1 year plus time horizon, they should buy. And I think the upside is fairly good. Downside is limited because both the stocks are quoting at very low valuations. So these are my two wealth creation ideas for the day.
Okay, let's kickstart our viewer queries then. First up is a Twitter query from Tushar Deochakke. He wants to ask if one should look at Bandhan Bank at this juncture. Does he have a further scope for growth from the current level, or is the run-up more or less exhausted? Kunal, coming to you on Bandhan Bank, after reaching multi-month highs of about 390, 395 levels last month, it has come down a fair bit, more than $100 from those levels. So should one look at investing at this juncture, or do you see further downtick here?
So I think, you can look to buy the stock at current levels. So I'm not sure of the fundamentals, but purely on the charts, Karanya, I think the stock looks attractive because from that 150 level, 150, 152 where the stock had tested, it had jumped up to almost 398, 400. So it's return of more than 2x, on the stock price. And then from there, you saw some bit of scale back into the stock price. It's down almost 100 rupees from those kind of levels. So from 398, 400, the stock is at 287, 285. So I think it's a good correction for Bandhan Bank. Now, whether the stock can correct by another 10, 15, 20 rupees, yes, that's always a possibility which could be open to the stock price. But just looking at the sheer, the rally from 150 to 400 and then a retracement of sorts, I think it's available at an attractive price at current levels. So I think as a pure risk reward play, Bandhan Bank at current levels could be a attractive buy purely from a medium to long term view. And if the stock, and if the overall market continues to remain as buoyant, then the stock can easily come back to those 380, 400 levels pretty swiftly. So that itself could be a return of more than 30% for the investor. So I would advise that Bandhan Bank could be a good bet, but provided the time horizon is medium to long term.
Okay, so thumbs up to Bandhan Bank from medium to long term horizon. Ashish, what is your sense on Bandhan?
Well, I kind of agree with the positive views. I think the bank had a huge overhang of RBI, insistence on promoter reducing its shareholding. That has already happened. So that is, the bank has overcome that problem. Going forward, the bank is certainly one of the better managed ones. The Q1 performance was also quite good. The bank has a very strong liability franchise, vintage customer base, and a very decent track record. So I think overall it's a very good bank to stay invested in. Banking as a sector likely to continue underperforming, so it may not be the best of places to put your money in. But within the banking space, I think Bandhan Bank would certainly be one of the better stock ideas, especially if you're not looking at large banks, you're looking at a mid-cap bank idea, then Bandhan would certainly be a good idea. So I have a hold rating on this. I think the bank, within the banking space, it is certainly one of the better ideas.
All right, thanks for that, Ashish. Let's remember Bandhan Bank is also one of the few that hasn't raised capital. And in fact, there's only been a block sale, although at a 10% discount, in order to comply with RBI norms. So given that even the likes of ICICI, Axis are raising money, but Bandhan isn't, that might give you an indication that the management feels they're fine right now and that they don't really need huge capital to support any big asset quality issues that might come. Let's move on. Indian hotels. Now, Rakesh Jhanjhanwala has been buying this stock quite aggressively, and I think he's openly said that he would be open to even hiking his stake. And these hotel stocks have really taken a beating, and it's a great franchise available at a great price. So, Kunal, Tushar, Dio Chakke has written to us, and what he wants to know is, will Indian hotels gain pace or break away from the current? So given that for another quarter or two, these hotels are going to have low occupancy and people aren't even going to the restaurants, and aren't able to even have any of the other services, are these hotel stocks really running away, or are there going to be plenty of opportunities to keep buying them?
No, I think you should be looking to buy Indian hotels at current levels. So I think these are very attractive prices for hotel stocks or the airlines, etc. I think if you can probably try and club this into one basket, because I think at 160, 165, I remember very clearly, the stock was looking fairly attractive just 6 months back or 6-8 months back, and at those levels, it was due for a strong breakout on long-term charts. Now, what's happened is from 160 levels, the stock had corrected to 68. It's now in just the last 1 week or 10 days odd, it's seen some bit of spike up again. So I believe that there's interest which is coming back into the hotel stocks, and specifically for Indian hotels. I think at 95 levels, I think it's a very attractive buy from purely a long-term view. And I think your time horizon has to be 2 years, 3 years or more, because I believe that the long-term structure for Indian hotels on prices is very attractive, and even on the short-term charts, there is a definite momentum which is coming back into the stock price. Now, whether you want to buy the entire quantity at current levels or you want to wait for some sort of a correction into the stock price or into the overall market, that could be debatable. But I think your time horizon has to be long-term, and you should definitely be looking to add the stock.
Kunal's really positive on Indian hotels and he's viewing it as a long-term play. But Ashish, coming back to you, fundamentally, it's a leveraged company. Even EIH is leveraged, even Lemon Tree is leveraged. If you look at the Q1 numbers, Lemon Tree is the only hotel company that actually managed to give you some positive EBITDA. Indian and EIH both have EBITDA loss. So given that we aren't really going to be going to hotels in a big way, at least the way the virus is currently panning out. Fundamentally, do you think prices have the ability to really shoot up from here?
Well, I think depends on what you're looking at. I agree with you that currently the hotels are obviously not doing well, and I don't really see why one should focus on the current quarter EBITDA, especially when you are trying to value a hotel company, because obviously the quarter has been very bad for all companies in hospitality sector. But my sense is that if you are a long-term investor, this is a great stock idea, because remember one thing, that I think in bad times, all the industry leaders and the well-managed companies in the industry are actually gain out of the recession in any industry, and same thing should happen in the hotel industry. I think when we all come out of it, and we are very sure that sooner rather than later we all will return to normalcy. Indian hotels would start doing better than even earlier, because a lot of other smaller hotels or badly managed hotel chains would have collapsed or would have folded by then. So the whole supply, the supply chain would have got disrupted, but the stronger players would still remain intact. So when the demand comes back, these stronger players would do better than before, and that is why my conviction on Indian hotels is very strong. Disclosure here that I've been holding Indian hotels in my portfolio, and I also have recommended to my clients. I think anybody who has a 3 to 5 year kind of a time frame, this is a beautiful, very great entry opportunity for making huge capital gains over the next few years, because the hotels, the ones, especially the stronger ones, would do very well once the normalcy comes back, because people would return back to holidays, business travel, everything would come back to normal once once this pandemic gets over. So with that in mind, I think the future looks very bright, because once the demand comes back, the supply side constraints would make sure that the hotels which are strong fundamentally and financially would do even better than before. So I have a great high conviction call on this. It's a great stock to buy, in my opinion. And with the 3 to 5 years the time, I am pretty confident this can be a multi-bagger from the current levels.
Okay. All right. Thanks much then, Ashish and Kunal, for joining us, for helping our viewers with their queries and sharing your trading and investment bets. Keeping it with the markets then, we spoke to market veteran A. Bala on revival of the rural demand. Early in the day, we caught up for an exclusive chat. He anticipates rural demand to return quite strongly and sharply post-monsoon. Let's listen in.
Yeah, I think some of the areas where we have been quite successful in building our portfolio post to COVID when the fall came, which is linked to the economic downturn, and also the growth is not going to come back in a hurry. Then where do you hide yourself in such a scenario in portfolio allocations? Clearly, we have been quite successful in building the portfolio towards sectors that we can call it as a little bit agnostic to the current downtrend, pandemic-related issues. At the same time, there could be beneficiaries such as pharma, such as IT, even such as energy sectors. And that's why I think we went a little overweight and at the cost of bringing down the exposure to the financial service sectors to some extent. At the same time, we're also seeing some sort of revival of sectors, especially on rural-related demand that could come back on the back of good monsoon. And also the sectors such as commodities, which is of course cyclical sectors, but having seen a significant fall, having seen destruction of value in commodities in the last 4 or 5 months. Now this demand supply equilibrium coming at par, and start seeing actually the uptick on the price movement. There also is something which as the fund house have done in terms of allocation to the metal as a sectors, commodity sectors. So I think these factors helping us definitely in the portfolio constructions.